Ever sell something and kind of later wish you'd held out for a better price?
Happens all the time, right?
Yeah, and turns out it's a dilemma venture capitalists face all the time, even after, a company goes public. We're diving into some really interesting research today. It actually flips the script on how we think about venture capital.
Oh, this is going to be good.
It is. It's by Li, Chi, Lan, and Wang. Their article in the Strategic Entrepreneurship Journal.
Okay, yeah.
Called Venture Capital Exit After Venture IPO.
Right.
And it challenges that assumption that, cashing out at IPO, that's it. That's the end game.
Yeah, totally. You think of IPO and it's like, woo, time to celebrate. Cash in.
Yeah.
I mean, that's the conventional wisdom, right?
Exactly. But this research is saying, hold on, not so fast. Some VCs are actually holding on to those shares. Yeah, betting on even bigger payouts later. So it's like, why pass up a maybe huge payday right now?
That's the question, right?
Yeah.
Why not just take the money and run? Well, not run, but,
Right, exactly.
This is where the researchers introduced the idea of an exchange option. And it's kind of like, imagine you could sell your shares right now at the market price,
Right.
which might be very tempting.
Right.
But you also have this option to hold on, knowing that maybe, just maybe, that company's value is going to skyrocket in the future.
So it's like, do you take a sure thing today or gamble on something potentially much bigger down the line?
Exactly. Weighing that certainty versus the potential. And this is where it gets really interesting, especially when you think about how VCs use their knowledge, their insider knowledge, to make these kind of bets, particularly in let's be honest, a volatile market. Let's be real, predicting the future of any company, even one that's gone public. It's
like reading tea leaves.
It is. And the researchers zero in on this inherent uncertainty, especially in a fast-growing economy like China. I mean, startups are, by their nature, unpredictable.
Even after they go public.
Oh, absolutely. New tech comes out of nowhere, industries change overnight, and then you've got all these other things, unforeseen events.
Yeah, that can throw everything off course.
Totally.
So even if a company looks great at IPO, there's that chance, right? That chance its value could just explode or totally tank.
And that's where having those insider insights becomes really key.
Because they know things the rest of us don't.
Exactly. So holding on to shares for VCs, it's not about sentimentality, it's strategy. It's about using that unique position, that knowledge, to maximize their gains. They're playing a different game than the average investor.
It's fascinating, right? Like they're playing poker, but they've got this whole other hand we can't see. So what are these insider insights that give them an edge?
Well, the research really digs into two main areas: patent applications and, get this, market surprises.
Okay, patent applications, that makes sense. Strong patent portfolio, usually a good sign, right? Means innovation.
Right, exactly. But here's the thing, the market, it doesn't always get the full picture right away. Even experts sometimes need time to figure out how valuable a new technology really is,
Yeah. So there's like a delay between what the VCs know about a company's patents and what the public sees.
Exactly. Information asymmetry. It's like, imagine you're buying a used car. The seller, they know every little quirk, every potential problem, way better than you ever could.
And in this case, the VCs are the ones selling the car, right? Holding on to something they know is worth more.
Exactly. Patience is their game because they understand the tech, the potential, the long-term value maybe better than anyone.
Okay, that makes sense for patents. But what about those market surprises? That sounds way less predictable.
Right. Sometimes a whole industry can just take off or tank for reasons no one saw coming. Consumers change their minds, new regulations pop up, global events. It's a lot.
And even if a VC knows a company inside and out, that doesn't make them immune to that, huh?
Nope. But that's where being plugged in gives them an edge. They often spot those shifts, those little changes in the market before anyone else.
Like always scanning the horizon, looking for that wave that's about to break.
Exactly. And because they've got that early warning, they can adapt. They can go all in on a company that's about to ride that wave or cut their losses if they see trouble brewing.
So it's not just a one-time decision at the IPO, it's like constant recalculation, right?
Yes. Always weighing the potential against the sure thing. And that's what makes this research so cool. It shows how VC strategy is not just a straight line. It's about being flexible, thinking strategically, especially when the only constant is uncertainty.
Navigating a maze that's always shifting. And their knowledge is the map. But let's be real, we're not all VCs with access to like secret board meetings and stuff. So how does this apply to the rest of us? Can we use this in our own financial life?
That's a great question. And it gets at the heart of why this research is so important. Because even though it's about venture capital, the big ideas, They matter way beyond that.
You mean like the power of information and how to make good choices when you're not sure what's going to happen?
Exactly. That information asymmetry thing, it's everywhere.
So like buying a house, negotiating a salary, even just picking a restaurant, knowing what you don't know is important.
Absolutely. It's about being proactive. What info do I need? Who has it? How do I get it? It makes a huge difference.
Knowledge is power, right? The more you know, the better choices you can make. But the research did focus on China and how uncertain that market can be. Does this all still apply in, say, the US or Europe?
Right. It's a big question. Uncertainty and information, those are everywhere, but China's a whole different beast, right?
It is. And the researchers do say the Chinese VC landscape, it's like super fast moving, high risk, maybe even more information gaps compared to like the US or Europe.
So that exchange option, it might work even better there.
It's possible.
I'll tell you.
In those more, established markets, things are a bit slower, more transparent. Holding onto shares after IPO, it might not be as big of a deal.
But the basic idea, it still tracks, right? VCs, they've got that inside scoop, so they're always weighing, do I cash out now or wait for something bigger? Exactly. Doesn't mean they're right, of course, but that info shapes their choices. And that's what makes this research so useful. It gives us a framework.
Instead of just saying, do this, not that, it's about understanding how those decisions get made.
Yes, context is everything. What's brilliant in one market might flop in another. No one size fits all.
Reminds me of that saying, give a man a fish.
You feed him for a day, teach a man to fish.
You feed him for life. This isn't giving us a stock tip. It's teaching us to think about investing.
Love that. And that's what you're all about here, right? Not just giving info, but helping people use it.
Exactly. And one more thing that really struck me about this whole signaling idea, like usually we think a VC holding onto shares, it means they really believe in the company, right? A good sign for everyone else.
Right, sending a message to the market, we're in it for the long haul.
But this research is saying it might be more about strategy.
That exchange option, again. It's not just about looking confident. It's about using that information gap to your advantage.
So less about helping the company, more about when do I sell to make the most money?
It adds that extra layer, right? Not just do I believe in this, but how does this play out for me?
A whole different game. And I think even if you're not a VC, that's a good lesson. Looking beyond what's on the surface, understanding why people do what they do.
It's that critical thinking.
Yeah.
Right? Questioning assumptions, getting the full picture. That's powerful stuff.
And on that note, folks, we've come to the end of our deep dive into the world of venture capital. Hopefully you've got some new insights into how these decisions are made and how much uncertainty plays a role.
And if you're really hooked, we've got the link to the full research article in the show notes. Go check it out.
Because learning never stops, right? There's always something new to discover.
Yeah.
So until next time, keep exploring, keep asking questions, keep diving deep.